Dennis. Good afternoon to all the participants on this call. Before we proceed to the call, let me remind you that the discussion may contain forward-looking statements that may involve known or unknown risks, uncertainties, and other factors. It must be viewed in conjunction with our business risk that could cause future results and performance or achievements to differ significantly from what is expressed or implied by such forward-looking statements. To take us through the results and answer your questions today, we have the senior management of Salasar Techno Engineering, represented by Mr. Shashank Agrawal, Joint Managing Director, and Mr. Pramod Kumar Kala, Chief Financial Officer. We will start the call with a brief overview of the past quarter by Mr. Agrawal, followed by a Q&A session. I now hand over the call to Mr. Shashank Agrawal. Over to you, sir.
Thank you, Lokesh. Good afternoon, ladies and gentlemen. On behalf of Salasar Techno Engineering, I would like to welcome you all for Q2 FY22 earnings call. Hope that you, your family and colleagues are well and safe and are taking necessary precautions during these tough times. Let me start by taking you through some of the highlights for the quarter. I'm happy to share with you that your company has delivered strong all-round performance during these challenging times. On a consolidated basis, company has registered a revenue of rupees 200.2 crores for Q2 FY22, registering a growth of 35.7% compared to revenue of rupees 147.6 crores in the Q2 of FY21. The revenue contribution from the segments in Q2 FY22 is as follows. The manufacturing of steel structures contributed 76%, EPC for power transmission contributed 22%, and EPC from railways electrification contributed 2%. The growth during the quarter was mainly driven by timely execution of the orders for all the segments as operations have normalized across all our locations after lifting of COVID-led restrictions. EPC work is being carried out now without any hindrances. On the profitability front, the EBITDA for the quarter stood at rupees 21.5 crores compared to rupees 15 crores in Q2 FY21, registering an EBITDA margins of 10.7%. That is an improvement of 57 basis points year on year, mainly driven by better realizations. This shows a steady increase in our efforts to continuously strive towards improving our margins. The reported PAT for the quarter stood at rupees 10 crores with a margin of 5%, registering growth of 22.6% on quarter-on-quarter basis. Our total order book as on 30th September 2021 stands at rupees 967 crores, which includes unexecuted orders of 561 crores and EPC orders of 110 crores, where we are lowest bidders and waiting for the purchase orders to come in. And manufacturing orders outstanding in the heavy structure unit is to the tune of rupees 61 crores. An order in our joint venture, Salasar as rupees 235 crores. We also have an order book of 32 crores for export orders in hand. The heavy steel structure division of the company has started in its operations. As on date, the company is having an unexecuted orders of worth 61 crores in hand and is in the negotiation with some leading customers for supply of structures to various very important infrastructure sector. Telecom companies have again started to execute their capex plans for installation of new towers for 4G and the forthcoming 5G technology, and the recent telecom packages announced by the Government of India for the telecom sector has boosted the overall sentiments of the industry. We are very confident about the opportunities in our focus sectors. We continue to see a lot of opportunities coming in our way as the telecom operators are working towards improving their connectivity. Also, in the near future, once the rollout of 5G begins, we expect exponential rise in the demand for telecom towers. Increasingly, there is a demand from the power and railway segment and also our new heavy structure division. We remain committed and are working towards our set targets for achieving higher profitable growth and becoming one of the leading players in our industry. I would like to thank all our shareholders for their continued support and faith in us. This is all from my side. I would now ask moderator to open the floor for the question and answer section.
Thank you very much. Ladies and gentlemen, we will now begin the question answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. First question is from the line of Divakar Pingle from Christensen Advisory. Please go ahead.
Yeah, I just thought I'll take the lead, given that there is a bit of a hesitation in asking questions. A couple of things, Shashank. Obviously, I think the performance has been fabulous. Maybe if you could just kind of brief on what's actually driving the growth and, how do you see this panning out for the rest of the year?
So, basically in all our sectors, I think we happen to be at the right time, at the right place kind of a situation. Telecom is, as I mentioned, the government is giving full focus on telecom. As is evident from the telecom package, which has recently been announced by the Government of India, wherein the issues of the telecom operators have been taken care of. You've seen Airtel raising money for expanding.
Hello? Janice, did we lose them?
No, sir. Sir is connected. Hello, sir?
Okay.
I believe you muted yourself.
Yeah, I am connected, but I think Mr. Shashank Agarwal lost the connectivity.
Mr. Agarwal?
You have the connectivity?
No, I have.
Mr. Agarwal is connected, sir. Hello, Mr. Shashank Agarwal?
Yeah, I'm connected very much.
Go ahead.
Yeah. So all these positive steps from the Government of India, they are basically, I consider them as a watershed moment for the telecom industry. It will not only give boost to the existing players to expand their networks, but they'll also jump in by full force when the options for 5G are announced, probably end of this financial year. And as I've been mentioning earlier also, today India has only 650,000 towers, which basically means around 800,000 or 850,000 points of connectivity for the existing network wherever we are connected today. But as you would see, there is a lot of trouble in connecting each other. Once you are out of the metro, you are out of 4G, you get connected only on 2G. There is no data connectivity. The data consumption in the rural areas is increasing day by day, and that is giving a lot of opportunity for the telecom operators to expand in the rural areas. And there is a lot of growth is coming from the rural areas now, and this will keep on coming when the 5G is also announced. As far as power transmission goes, we have a very good order book already, and we have participated in certain tenders where we expect to be competitive and share the results as soon as the tenders are announced. Similarly, in the railways, we have good order book running, plus we have participated in a lot of new tenders also, which, Government of India's focus is on railways and to convert all the diesel running lines into electric lines. Similarly, all our verticals, whether it is, as I mentioned, telecom, power transmission, railways, and even the new vertical of heavy structure division, we have some very good visibility of orders today in hand. Plus, we are under discussion with various very good customers. I would not like to reveal their names at this stage because that's a little confidential and market sensitive information. And these companies are working on very large projects of national importance, which are priority sector for the government of India, and we expect to gain a certain market share from there also. So this is about how the growth is going to span out over the years.
Yeah. Thanks, Shashank. I just had one more question. More on order book position. As I see your presentation, I see a number of about 967 crores there. I just want to understand, this would be executable over what, next 12 to 18 months, or how does it work?
So EPC orders are typically would be, these will be executed over next 12 to 18 months. There will be certain portions will be done in next quarter, and then after that, and then some in 1 year, some in 12 months, some in even 24 months also. Like we have a project of Power Grid Corporation, which has got a 18 months timeline. So it will take almost 18 to 20 months to complete that. Similarly, different projects. Yes.
Okay. And my last question before I kind of get back is on your margins. Obviously, I see a little bit of dip on the margins as far as this quarter is concerned compared to Q1. At a steady state, am I right in assuming that the company will be at about 11 to 12% margin percentage, or am I reading that right?
Well, we are trying to improve on all the fronts. I mean, typically our margins have been in the range of 10 to 11%.
Okay.
I mean, that's what we have been doing. I mean, as I've been mentioning, we are not doing any rocket science. It's just that we are doing whatever we are doing is doing slightly better than others. That's why, we've been able to maintain those margin gains. It's very difficult for me to give you a statement that these will be 11% or 12%. But yes, they should be remaining in the range of 10 to 11% somewhere.
Sure, thanks. I think that's all from my side, Janice. Yeah.
Thank you. A reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. The next question is from the line of Kalpesh Koti from Valentis Advisors. Please go ahead.
Yeah, good evening, sir.
Good evening.
Yes, sir. I think you managed well this quarter on the margin front despite having cost pressures. Right. So my question related to on your for second half, do we see cost pressure going forward, or we continue with this 10 to 11% margin?
So the Kalpesh, the issue is that, and the advantage I would say, with us is that we have a price variation clause with most of our customers, barring a couple of that, right? Or even the EPC projects have a price variation clause. Yes, there is a pressure in terms of cost of inventory going up because the steel prices have gone up, the zinc prices have gone up. But the good part is that we are able to pass those costs to our end customers, whether it is telecom or EPC business. So we have different kind of formula with different customers, but basically those costs are passed on. Yes, you are right in a sense, yes, that we'll be carrying little extra inventory in terms of value, and this would be incurring a slightly higher margin, slightly higher finance cost in terms of carrying that inventory. But apart from that, I think we should come out well.
Okay. So my questions on your top line. What was the run rate we expecting in the telecom, and how was the order book for the last 6 months?
So last 6 months, telecom has not been too great, to be honest, because the first quarter was affected by COVID, hugely, due to lockdown. And then in the early quarter, in the early part of the second quarter, there was a news of Vodafone going down, and there was a lot of apprehension in terms of in the minds of our customers in terms of whether Vodafone would remain in the market or will it go bust. And once the telecom policy, the telecom package has been announced by the telecom minister and the government of India, there's a lot of positivity which has happened in the overall market, and which has lifted the sentiments of the industry all across the industry. And the order books are now good, and we see almost 30 to 35 crores of telecom business every month in terms of structures. Last 6 months, we have had orders regularly, but the rollout was not all that great, as I mentioned. But going forward, it seems to be a lot of trust. It's seeing a lot of momentum. A lot of traction which is coming in, rolling out new sites now.
Okay. Thank you, sir.
Thank you.
Thank you. A reminder to the participants, if you wish to ask a question, please press star, then 1 on your touchtone telephone. The next question is from the line of Ranveer Potra from Potra Investment. Please go ahead.
So just wanted to understand how big is the opportunity size in different business segments, and how are we placed in grabbing those?
So, see, it's a huge opportunity all across the sectors. Now it all depends how much you want to do, at what price you want to do. Our focus traditionally has been to maintain and to keep minimum margin. I mean, we have an opportunity wherein probably in EPC business we can book orders worth 10,000 crores. But we don't do that. That's for two simple reasons. One, if we go and do that, probably we'll be underbidding ourselves and we'll be losing on the margin. Secondly, there'll be huge. We don't have that much of capacity available to do that much of business, and there'll be huge issues with respect to the cash flows and other things. So we bid only whatever. I mean, we would normally, our policy has been we bite only as much as we can chew. So, I mean, it's a huge stake, available in the market. I mean, it all depends how much you want to bite into it. As far as the telecom is concerned, telecom looks like a good opportunity. I mean, as everything is looking positive. I've said this earlier also. I'll repeat it again. Whatever we have done, I mean, the industry as such has done in the last 25 years, probably is going to be repeated in terms of volumes or in terms of value in next 5 years. That's the kind of opportunity we are looking at. And in terms of EPC business or power transmission, it's evident that the power generation is increasing day by day, and a lot of solar, a lot of wind power, a lot of other power generation is happening. So you need the power lines to transport that. Similarly, in terms of railways, only 47% of the railways which has been electrified. Balance 53 has to be electrified, and the government has allocated huge amount of funds for the railways to do that. So opportunity itself is a huge take. It depends how much you can bite into it and deliver efficiently.
I absolutely agree to your point that one should take or bite accordingly how much one can chew. But as you mentioned, you are rightly available in each of the business segment at the right time. So let's say if the business growth momentum is there for the different sectors at this point of time for let's say next 5 years, 7 years, and suppose that there is a lull period for those segments. So why should not we grow at a faster pace and do business accordingly? Because I believe our peers are growing much faster than us. So, we would be losing market share on that front in terms of business opportunity going by.
See, if you talk about the peers, probably my peers compared to myself, compared to Salasar, are 10 times bigger in terms of their balance sheets, in terms of their size, in terms of their experience, in terms of their, being there in the market. We are, compared to them, are a much smaller player. But yes, we are competing them in each of the tenders, in each front. We are running hand to, shoulder to shoulder with them. So yes, you are right. But again, Today, if I have to do EPC jobs of 300 crores in a year, I need a certain kind of a cash flow. And suppose next year I would like to do 3,000 crores of EPC jobs, thinking that I might lose the market share. But I must have the funds available, I must have the manpower available, I must have the requisite experience available to do that. So we are growing. We are growing at a steady rate. I mean, I see a growth of 15% to 20% year-on-year basis, which is a good growth. I mean, to double or triple the growth is going to be difficult. I mean, we are a bit cautious of that.
I absolutely agree with your point in terms of the capital requirement. But I think capital is to a large extent available. Easy money is there in the markets as of now. So why not go for right issue if the market opportunity is there? Why not have funding from the existing shareholder? Because if growth are there, existing shareholder will not mind putting more money into the company and ride the growth momentum which is available in the industry.
Oh, you're right. And, we of course will try and, look at whatever options are available. See, everyone would like to grow. I mean, we have been growing consistently for the last 15 years, and going forward also we would like to grow at least 15 to 20% every year. And if there is an opportunity available wherein we can grow by 50% or even 100%, we don't mind. We have, options available. We have, we are looking at the opportunities. We are looking at how to make funds available for whatever we would like to grow. So it all depends how the opportunity knocks.
Any other business which the promoter is having apart from the current existing company?
No. We have only this business of Salasar Techno Limited, wherein we are market leaders in telecom tower manufacturing. As a telecom tower manufacturers, we also export telecom towers. We do EPC business of power transmission, substations, and railways. Okay.
And any specific reason why there are no FIDI interest in the company assets? Because though, as you mentioned, it has been growing at a healthy pace, but still institutional interest is not visible in this company.
We have been a small cap company, and probably institutional interest would come in now that we have been in the market for 4 years now. And personally, it's difficult for me to comment on that, why there are no FIIs or institutional investors.
I think 750,000 crore is a decent size company, though a lot of fund guys tend to invest in small caps so that they can go bigger in 2-3 years time frame as mid cap, and then 5-6 years become large cap.
Sure.
I think it's the right time that institutional interest awareness is made, and they are both building their partners.
Yeah, sure. We will try and approach more people now.
Yeah. And coming to, you mentioned that you are undergoing some capex plans. So how are those capex plans going to be funded, and what could be the business opportunity which could translate into once the capex is over?
So we have recently done a capex of almost 20-25 crores, wherein we started heavy structural steel division, which is going to give us a top line of almost 80 to 100 crores this year. And another capex, what we are doing is we are putting up a new galvanizing plant in our existing units by adding some extra land to everything adjacent to our existing plants. So what we would do is we will make this plant, it is going to be the biggest plant in terms of size of galvanizing in across all, manufacturers. So we'll be the biggest in India, wherein we would make transmission line monopoles of bigger sizes for higher voltages. This will give us an edge in terms of our margins, and also some sort of extra advantage wherein we could cater to all the customers under one roof. We are doing transmission line monopoles even today, but we are doing the smaller size ones. The bigger size ones we have to leave because we don't have the facility for that. So we are putting in that facility now. This will serve two purposes. They will put one of the existing plants as a standby. This is just in case that, something happens, so that at least we have something available to fall back to. Plus, it will give, since it's going to be a state-of-the-art new plant which we are importing from Italy, it will give us some efficiency in terms of our costs with respect to the zinc consumption and overall efficiency. And the capex in this is going to be to the tune of about 50 crores, which is going to be funded partly by internal accruals and partly by bank funding. So we have some 32.5 crores of bank, 37.5 crores of bank loan sanctioned for that, and rest 12.5 crores is going to be our part. So that's how the capex funding is going to be done. And we see an incremental margin, as well as we see an incremental top line of at least 100 crores added to our business by doing such. So,
okay. In terms of your business segment, I am able to correlate telecommunication, power and renewables, I believe, would be under one category only. Renewables is again power only, right?
Yeah, so in renewables, what we do is we don't do EPC business in renewables. We only supply structures for solar power plants to various customers like L&T, Avada, or Adani. So these guys are developers, so we supply fabricated steel structure which is galvanized at our plants to them. We don't do EPC in renewables.
And in power, what is done? Because I'm not aware, so if you could elaborate what's done in then power.
In power transmission lines, what we do is we manufacture towers, and we do complete lines installation. It's totally EPC business, like engineering, procurement, and construction. So we take a complete job end to end, from a state electricity board or PGCIL to put up a complete substation, a fresh or a line, completely new line. So right-of-way issues, foundations, semi-foundations, tower supply, tower structure erection, and installation of conductors or cables or insulators, and then charging the whole line. That is a part of the part.
So if I had to understand it correctly, telecommunication, I believe it's pan-India business which you are doing for different players?
Yes.
Power again pan-India, renewables again pan-India, or is it some state specific?
So renewables mostly we do in Rajasthan, Gujarat, Haryana, Punjab, and mostly in the northern states in Rajasthan and in MP, because then the freight element comes in, and it becomes difficult for a customer to buy into Tamil Nadu from here or in Kerala or in Andhra. Then customer prefers to buy from the local suppliers there, because the freight cost from here to there becomes high. So we mostly cover Rajasthan and MP, and mostly northern states. And in terms of power transmission, the EPC business, we are doing in Chhattisgarh, Assam, Arunachal, UP, Haryana, Gujarat. So mostly wherever we get an opportunity, except for the southern states at the moment, we are present, more or less everywhere, and Bengal also we are not doing.
Okay. And in terms of smart city, what is the exact product which we are offering in smart city solutions?
So in smart cities, we manufacture some specialized kind of towers, which are basically serving many purposes. It serves as a street light pole as well as a camouflaged telecom tower, and it serves not only as a camouflaged telecom tower, it also serves as a billboard. It has some public address system. It has cameras put onto it to monitor local area. It has emergency response systems. Sometimes it has EV charging station also. So it all depends, on the requirement of the customer. These all are customized solutions, wherein we combine a lot of, parameters into one pole without actually affecting the smart look. So sometimes we are putting a tower, it becomes ugly. But when you're putting a smart pole, it actually enhances the statics of the local area.
So you meant to say poles and smart city solution are cross-selling product in itself. Where poles are installed, you can install smart city solution as well.
Yes.
So if you could throw some highlights on the artificial intelligence vertical, I think it's nascent stage at this point of time. And what exactly is in that particular space?
So in artificial intelligence, we had tried to do few things in using drone technology to survey the existing towers for telecom as well as for power transmission. But that has been at a very nascent stage. We have not been able to do much on that because somehow that has not taken off too well. We had developed some systems wherein we were able to monitor the progress of the towers remotely through cameras and drones, and to do the health check of towers, like the towers which have gone probably 25 years old. We could use a drone which would go to the top of the tower and take photographs and analyze the health of the tower and whether it requires maintenance or replacement or anything. But somehow those costs have been high and the customer has not really accepted. They're still pushing the old school, wherein they are, they have rigger going up the tower and, checking the whole thing manually. So nothing beyond that.
Okay. And in the auditor report, there has been mentioned that 4 entities has not been reviewed by the auditor. So what are those entities and how come those are not reviewed?
Basically, these are subsidiary companies. I think Pramodji would my CFO.
So these are basically the joint ventures we are having on a consolidated basis. So these balance sheets are audited by the other auditors actually. That is what it has been mentioned.
Okay. But there are no qualification as such on those companies?
No.
Okay.
No, not at all.
And in terms of management experience, I see the enormous experience. How long has been the senior management apart from the promoters associated with the company?
So Pramodji has been.
We have professional in all the departments. Finance I am having experience of around 25 years. And in the engineering department also we have the professional. Marketing department also we have the professional. All departments are being headed by very senior professionals.
Thanks, sir. Thanks for answering my queries. And only suggestion is that since the business growth moment at this point of time, we should try to and aim to grow at a faster pace. If borrowing is required, rights issue can be done and so forth. Thanks, sir.
Sure. Thank you.
Thank you. A reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. The next question is from the line of Ajay Parmar, individual investor. Please go ahead.
Hello?
Yes.
Hello?
Please go ahead. Please go ahead.
Congratulations, sir, on excellent set of numbers. I have two questions. Basically, just to view on the current capacity, and what are our current capacity and the next 3 years, not the next 1 year and all. Say in the medium terms, what kind of capacity expansion we are looking at, and along with that, what kind of capex we are envisaging, and what are our asset turnover ratios. I just want to understand, can we reach maybe 2,000 plus crores in next 3 years? Provided the demand dynamics are in our favor, are we capable of doing that? And second, just wanted to know, 5G and beyond will require a lot of technology, upgradation, and a lot of innovation will come in towers also. So how are you going to, tackle this innovation challenge in terms of tower technology and all?
Okay. All right. So I'll answer them one by one. As I said, that we have recently done a capex of a few crores, wherein we have started a new division of heavy structural steels, which is going to give us 80 to 100 crores incremental revenue every year. We further plan to increase that, and probably we are looking at, yes, so it will be a forward-looking statement. We are planning to create more facility for heavy structural steel division at a different location. That is on the anvil. The things have not yet been finalized, but we are thinking of doing something which could cater to customers, across all the, mostly, catering to the eastern side of the country. This would require a capex of maybe around 50 crores, and this would give us a revenue of almost 150 to 200 crores every year. That's we are still thinking. That's on the drawing board. Nothing has been, finalized as yet, but we are thinking about it. That's one with respect to the heavy structural steel division. Secondly, with respect to our galvanizing, we are putting, as I mentioned, we are putting a new galvanizing plants by doing a 50 crores of capex. This would give us an incremental capacity of almost 50,000 tons, and at the same time giving us some advantage of having sort of a edge, wherein we would be the only one, manufacturing those kind of poles, which would increase our margins as well as, revenues. Plus, this will also serve as one of the existing galvanizing plants would serve as a backup in case of any emergency. So that covers your first question. With respect to your second question, we are very well prepared for 5G deployment. We have very good in-house design team, wherein we are working hand in hand with our customers to develop various solutions, which are going to be smarter, which are going to be lighter, which are going to be deployable at very fast pace. And see, today the challenge in front of the telecom companies is the revenue, because the call charges in India are still the lowest in the world. The average revenue per user is hardly 150 rupees. And I am of the view that most of the operators are going to increase it as they have to do the capex in the very near future. So even if they do increase of 15 to 20%, it's like 30 to 40 rupees per month. And if that revenue comes in, they'll be able to do a lot of good capex. But at the same time, even then, it's going to be very challenging for the tower companies to, find ways to install more and more towers in a very short span of time, because the demand is going to be huge. So we at our end have very good design capabilities. We have very good design partners. We have a design team in-house, as well as we have very good design collaboration with a Danish company called Ramboll, and so all of us are working hand in hand with customers to develop new and offering new solutions every day. There is a continuous effort and emphasis that the designs are smarter, designs are lighter weight, designs are cost effective, so that the rollout for the 5G happens at a very fast pace.
Okay, thanks.
Thank you.
Thank you. A reminder to the participants, if you wish to ask a question, please press star then one on your touchtone telephone. The next question is from the line of Ranveer Bothra from Bothra Investment. Please go ahead.
So just wanted to check, can we have one slide in respect of our peers in different verticals, and how are they placed in terms of their operating performance, revenue capability, and all those stuff, order book size? And also, are we competing with D-Link in the smart city solution business?
So in smart cities, we don't basically offer complete solutions, because see, smart city requires many things, which is normally the tenders which are floated are including putting out the smart solution, then connecting the whole city, laying of the fiber, then making a central control room system, connecting it to the hub, wherein government would like to have so much of information available to the local municipal authority or local administration in terms of traffic moving, in terms of management of crowd, in terms of cameras working. So what we've been doing is, in the smart city, is we have been basically supplying smart poles to the companies who have taken that work, on a turnkey basis, like HP or Honeywell or Wipro or L&T or Reliance. And, because it includes not only supply, it includes maintenance and then operations also for 3 years and 5 years, before it is actually handed over to the local authorities. So that's what we do in smart cities. And I was not able to get your first question. Can you repeat that, please?
It's not a question, it's just a suggestion. If you could include the peer comparison in your corporate presentation or result presentation, wherein in different segments you are competing with our players, their financial statement vis-a-vis your financial statement.
So to be honest, actually the kind of products or the kind of businesses we are doing, we have a mixed business basket. And if we compare that with, let's say, with any of the peers, there are people who are doing only transmission line business.
I agree.
Partly transmission, partly telecom. But there's no one who's doing everything. Yeah. No, I think we can do that. That's a good suggestion.
On a segmental basis, we can give a comparative analysis of what's their revenue, what's our revenue, what's our margin, what's their margin. I think overall company level it might not be possible, but on segment basis, I think we can do it.
Okay, let me see. Let me check. I'll discuss this internally with the finance team. Yes.
And also, sir, our return on equity is less than 15%, I guess. So, any thoughts on that? How are we going to improve and shape up on a higher trajectory?
So I think ROC is good. Return on capital employed is, I think, 19 to 20%, if I remember it correctly.
ROC is also around 15%, so it's reasonably okay. Not, exciting. It's not that exciting to investors. So both on ROC and ROE level, I think we need to have a scale up at a healthy pace going forward. And additionally, the dividend yield is also not encouraging. Since we are always doing capex on 1:1 basis, I guess our debt to equity is 1:1. So whatever profit is earned, I think requirement is in business is there, but dividend payout is also, I think, on a lower side. So any policy decision on dividend payout, that threshold is there, or how is it?
So we have been continuously paying dividend, and there's no written policy as such, but we have been paying almost 10% of our net profits as dividends every year. And this we've been doing since the day we went public. We started first dividend in 2017, and then we have been paying continuously. Typically, we have been paying 10% of the profits as dividends.
I guess if we can increase it to 25-30%, that would be great. And because in that sense, as a shareholder, the promoters will also stand to benefit, and in case rights issue, I think they could also infuse money in the company and build confidence to the investor, gain back. And sir, in terms of taxation, we are not having 25% tax bracket. I think there was tax concession given to corporates, including new companies at 15%. Are we not exploring those things, avenues in order to get?
That was available to the companies who were being put up as fresh and new. We were already there in the market.
I agree. All new businesses can be taken up in the new company. So in order to reduce the tax liability, and I think that would also help. And additionally, the existing companies, I think tax bracket is 25%, brought down to 25%. But what I see, prima facie, your tax is still way higher than 25% for last year.
We are in a normal tax bracket, whatever it is. We are not there in any subsidy or any special concession bracket as such.
Fine, thanks a lot.
Thank you.
Thank you. A reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. Ladies Ladies and gentlemen, that was the last question for today. I would now like to hand the conference back to the management for their closing comments. Over to you all.
All right. For taking time out. Yeah. So if there are no questions, then I would like to thank everyone once again for taking time out to be with us this afternoon. And I wish each and every one of you and your family members a very happy Deepavali and a lovely festive season. Thank you.
Thank you on behalf of